Hey everybody, Joe Malone here, coming to you live on Dallas Trading Floor. Hope everybody's having a very nice Friday. This show, by the way, if you're watching on TikTok, is being simulcast on YouTube. Very easy to get over to the YouTube channel. All you have to do is go to my profile, click on the link, and then just hit on the button that says Dallas Trading Floor 426. So easy to get online. Unfortunately, I can't show you any of the charts on the TikTok, but I can show you them, of course, on the YouTube. So let's get into some slides. Thanks, everybody. I hope everyone's doing well out there. I know that I am. I did have a little bit of a sell-off today on some of the things. My coals position, which I thought I was so smart on. Well, it's I got stopped out of Kohl's, and I wish I had done better on that one. But hey, whatever. But two key things: Apple is moving into a buy zone. Of course, I did. If you've been watching the show, you know that's in the small portfolio. Go over that in a second. And also Nike is also moving into the buy zone, so they might have an opportunity there. I'm in both of these, and so we might. Let's kind of get to the slides. So here we go. The Dow Jones, the U.S. indexes, the market indexes, basically are off a little bit, except for the Nasdaq. The Nasdaq was just up slightly, very very small amount. The S&P 500 was off, and the Dow Jones are out. So, kind of a sideways market, a good market to possibly think about doing stuff like covered calls, because that typically does very very well in a market like this. That is a little bit is like this. So, the market is basically going sideways right now. A little bit of adjustment. Hopefully, we need the market to catch up a little bit. So I'm hoping that we won't, they will kind of just stall out a little bit here and then let the market catch up to, kind of where it needs to be. So, it did kind of move in a good way that way. Just want to show you the allocation on the small portfolio. And of course, this is a portfolio that, these are actual stocks that I'm trading, not all the stocks that I'm trading, but this kind of shows you what I'm in, how I'm allocating it, and what kind of profit I've been making basically in the last month. My biggest position, believe it or not, is Shoe Carnival. I'm up about 10%. It did come through earnings, and I did hold it through earnings. It was up a little bit more. It's pulled off a little bit. I've been in it about 17 days. So it just came through earnings, so it's 124 days until earnings. So it's got a long time to go. My stop loss on this one is set at 38.70, and so that you might want to note that as well. And we're up a little over $200 in 17 days on that. So that's pretty good. Rambus, of course, this is the one I did add to today. I added to my position in Rambus. I added a quarter position, doing very, very nicely. I've had it 8 days, and it's up about 10%. So that's looking pretty good. Stop loss on this one, 23.65 on Rambus. Ford, of course, this is one I really like. It's pulled back a little bit, but it's still doing very, very nicely. We've had it for about 3 weeks, and we're about 76 days in front of earnings. My stop loss on that one, 19.25 on that one. Salesforce, this one has kind of been a laggard. I may sell Salesforce, and because it just isn't moving as fast as I would like it to move, I probably will sell Salesforce and put it into Apple, because that's kind of moving a lot better. I've only been in Apple 3 days since the breakout over the 153 buy point on Apple. So 153 was a great buy point for Apple. I'm in there with a stop loss at 149.40. It just came through earnings, and the earnings were good. We've got about 68 days until the next earnings. So we've got a long time to go there. Nice place to start building a position in Apple. Hopefully by the end of that 3 months, we will be up over 10% in Apple. And if that is the case, we can hold it through the earnings. ASML, I'm up about 2% in 16 days. This is a good stock. It just kind of seems to be lagging a little bit. Don't know what I'll do with it. The stop loss on this one is 805. It's kind of an expensive, kind of a pretty expensive, stock. But 805 is the stop loss on that one. Tilly's, this is again a retail stock. I've had it for 4 days, up about 2%. Nothing really exciting. But we are coming into earnings in about 12 days. So I probably will sell this one prior to earnings. Stop loss on this one, 15.16. So that kind of gives you an idea of where the small portfolio is headed. And by the way, if you want access to the small portfolio, you need to be on the Action Trade Alerts list. Very easy to get on that. All you have to do is go to www.Dallas Trading Floor and sign up because this one is free and easy to get into. If you're looking on TikTok, super easy to get also on the Action Trade Alerts. All you have to do is go to my profile, click the link in the first and last name, and we'll get you on those trade alerts as well, so that you can see kind of what's going on in the small portfolio. Here are some of the stocks that it says I'm buying. It says I'm buying Kohl's, but I am not buying Kohl's. Here's what I currently have in every portfolio. I don't have all of the portfolios broken out, but this kind of gives you an idea of what I'm holding currently. I did sell KSS today. I just got stopped out of it, unfortunately. Not really liking that. I've got CRM. I've got Robert Half, of course, and the Invesco QQ True Trust. This has been very nice for it to me. IIPR. This is the marijuana retail REIT, marijuana property REIT. So it's kind of interesting. Down a little bit today. Ford. It's down a little bit, but I like Ford. We're starting to see Tesla come back here a little bit. It closed above that very key $1,100 range. So I probably will be moving more capital into Tesla. It is up. I did have to, my average cost on Tesla right now, it's fairly high. It's about $10.50 because I've taken profits in this one. Shoe Carnival. This is down a little bit today, but I still believe in Shoe Carnival. I don't know. I may, it's come through earnings and it's looking good. So I kind of let sleeping dogs lie. I don't want to really do anything with it. AMSL, it's down a little bit today, but it's a very high price stock. So, that's not a whole lot of movement for them. Rambus, this is one that I did add to a position in. Rambus, I do like Rambus a lot. Symbol is RMBS if you're interested. And of course, one of my all-time favorites is TTD. I've been trying to build a larger position in this one as well. I may start selling calls on this. Don't know. And of course, we talked about Nike, NKE, Nike. That's up today. That's looking very nice. That's in a buy zone right now. That's actionable right now is Nike. UCC, this one should be off the list because I did sell Ultra Clean. It just didn't perform well enough for me. Of course, we're in Tilly's. We're in Apple, of course. We're also in Nvidia. I did add to my position in Nvidia. It's up nicely today. And then I bought this one, Zim Shipping. So that's kind of where I'm at. Just want to kind of show you the charts on two of them that I do have. One and this is the one for Zim Shipping. So Zim is a shipping line, and it came into a very nice buying point here. It's up pretty strongly today, $2.68, about $4. Yeah, 4.88%, and very strong composite rating on this one. The shippers have been doing well, and this is one of the ones I have been buying. Zim Shipping. Also, I did add to one of my favorite stocks, of course, and everybody knows this, and that's Nvidia. And this is a monster, and I want to get more Nvidia. I'm afraid of acquiring it above a buy point, but this is kind of an alternate entry here. I wouldn't probably start a new position in Nvidia here, but I would definitely add to it, and I have been adding to it. When we came through earnings, we gapped up, then we kind of consolidated, and now we're moving higher. So this one, this one is huge. It closed almost at 330 today, which is absolutely incredible. And I do think that we're going to see some more action from them, from Nvidia. Um, I have been, if you've been with me for a while, you'll know that we have a trade, we have a spread trade. It's a bull put spread on Domino's Pizza. And I just kind of want to show you the results. This was in the red for quite a while, but it's coming out of the red nicely. Um, Domino's is finally making its move. It came down, it tested, it reversed, and I thought, oh, I'm going to have to close this one early for a loss, but it doesn't look that way. Bull put spread on Domino's Pizza. This actually expires in December. So what I'm hoping, of course, is that we'll be above. We'll be right at that 555 level or so. If we do, we make all the money, and that if we can get up there, we can make all the money in this one. I'm going to be holding this probably all the way into expiration. I normally don't do that, but in this case, we started to make the move. We were in the red practically for the whole time that I've been holding this one, and now it looks as if it's finally getting to the point where we're going to see we're going to see it move better. So basically, let's get into some of those questions. And let me move out here. Thanks to everybody. Happy Friday to everybody. And take the first question here. Your thoughts? Akbar writes in about FDX and Square and Uber. That's a pretty interesting company. So let's kind of take a look at Square first. Let's see if I can pull that up here. I'm going to look at Square here and at all of those angles here. Okay, as we go back to so I'm just pulling up the chart as we speak. Let me get the charts up. There we go. Okay, so here is Square, and unfortunately, with Square, it is not looking too healthy. I wish it was. I wish this was looking better. We're in this downward trend on Square, so I hope that you're not in it right now. We need to see it reverse. It might reverse at the 222 mark because of this consolidation, but the relative strength is pointed down. So right now it's just a bad time. It's just a bad time to be in Square. Unfortunately, I wish I had better news on Square. I like the company, but I think that you just don't want to catch that falling knife. So, for Square, if you're down 7%, I would sell. I would sell. And it was doing so great, but it just seems to have, it just seems to have problems. I mean, it's in this pullback, and we dropped below the 200-day line, and we're at the bottom of the consolidation. It bounced once, but then pulled back. So I just think with Square, I think you just gotta, you gotta just, you gotta just pull the plug on it. Unfortunately, and it's unfortunate, but there you go. Let's take a look at FedEx and see if there's any better news there. And let's see. And it's the same kind of problem with FedEx. We're just having these issues regarding these stocks. It's below the 200-day line. I don't really want to buy them below the 200-day line. Now, if you're in it and you bought it at 216, maybe you'll be happy. But if you're not, this is not doing the right action. It needs to come up above that 200-day line. And right now, the 200-day line is approximately at 271. And right now it's at 242.99. So even though you have a nice bounce on here, I think you got to be really careful. There's a bounce after hours. Earnings are 27 days. It doesn't look good. I wouldn't buy it. So I would have to say on this one, for right now, I would for right now, I would have to say, no to FDX right now. And that's that's I mean that's just the long and the short of it. I mean, you just really have to not do FDX now because it's below that 200-day line. It doesn't look like it's getting support now. It may change, but the relative strength line is 18. The checklist 44. You don't want to be this one. You don't want to be in Federal Express right now, unfortunately. I wish I had better news, but I don't. Jim, hey, on the small account, took a half position to a full position in KSS. In the small account, took a small account. Do you think to hold it, or is it still going down? Unfortunately, I wish I had better news for you. I wish I had better news for you on KSS. I did. I got stopped out of KSS. I got stopped out of KSS, so I'm out of it. I have a very strict rule, and that is, if I buy a stock and whatever the average price is, if the average price falls below 7% of where I bought it, I sell it regardless. No questions asked. It's very painful because I thought I had a really good entry on I thought I had a really good entry on KSS, and it definitely came through earnings well, but it just got whacked today, and I just have to be very strict on my rules, and it's probably going to go back up. I'm probably going to kick myself, but I bought basically 35 shares at 61.70 right here. You see that? And then boom, it moved right up in the buy zone. I thought I was so smart, but I got the stock got rejected, and boom, it gave it all up. Now it's probably going to turn back and move back up into the buy zone because this is a classic handle. Even though we have a double bottom pattern here, this is a classic handle, and that's you buy it as it moves above this reversal line on the handle. And that's what I did. And so I thought I was so smart. I had this great entry, but I got rejected. I got rejected. So I ended up losing some money on that. I don't have a great batting. Well, I have a pretty good batting average actually by doing this, but I don't have 100% batting average. And I wish, the entries are the hardest to get right. The entries are the hardest to get right. That's why I always emphasize buying at the, as they're moving up to the buy point and right beyond it, because the entries are very hard to do correctly. But if you do your entries right, you can just do great using canceled systems. So, unfortunately, that's kind of where I'm at. Here's what I would do. If I'm down more than 7%, I sold it. And you could definitely, it may reverse, but it doesn't look like that on the candle. Looks like it's going to come back down to the 200-day line and test. And I'm afraid that, you see, there you go. We had this beautiful gap up. This is the 1 minute. This is the 15-minute chart. We had this beautiful gap up that was basically yesterday. So normally that's a great time to buy it, but it just couldn't hold on to the support. And it fell below 57. So, I sold basically, my stop was right there. And, my stop was right there, as you can see, at 57.47. This is absolutely, that's where it is. So it went below that. I paid the price. It's now readjusted to 57. But if you are down on this one, probably want to sell it. I don't want to sell it and wait for a better entry. Thanks for the Apple buy point. What is your best stock? Well, I don't know. I don't know what's going to be the stock. But there's this tremendous rotation. You know, I did buy Zim today, and that one's looking good. So let me just show you Zim. Let me show you Zim, Zim and Zim, Zimazuma, Zimazuma. Um, Basically, this is the stock Zim. It's a shipping company. Now, I don't know if it will move up next week, but I'm liking the strength that's coming into it. This is the reversal line that I have on it. As you can see, this diagonal line is dotted. And the high point of this 62.20, then 55.50. It's moved past that reversal. Very nice. This is what I bought today. I bought a full position at 58.22. So I actually bought it a little bit high and it pulled back. So, sometimes it's better to wait till the end of the day. I do a lot of my trading in the beginning of the day because I have meetings sometimes in the middle of the day, so I can't watch it as closely as I'd like to. But this one, this one basically pulled above, and I bought it a little bit too high. See, I bought it at 58.22, but the stop loss I have it at 58.53. This is one you might want to look at possibly for next week. It's in a good area. It's been better. This is the shipping area. This is the ship transportation area. It's got an 89 checklist, which is pretty good. This area seems to be getting some love. It came through some very, very nice earnings. And here's the thing. I want to take a look at the fundamentals. And part of the reason I look at the fundamentals so much is because in the short term, you want to look at technicals. That's chart patterns. But in the medium to longer term, you want to look at the fundamentals. And basically, the fundamentals for Zim are this. You want to try to buy stocks typically that have where their sales are moving up more than 20% a quarter. Now, if you look at Zim, that's indeed the case. September for last year, December of last year, 20%, 64%, 112%, 200%, and 212%. The sales for Zim are going up extremely fast. And as you can see, their profits are too. Look at that. Look at that. The up 1,000%, 1,000%, 1,000%, and 794% this last quarter. That's the reason why I think the action on this one likely until the next earnings, which the next earnings on Zim is going to be 3/22/2022, are likely to be very good. So this is one of the ones that I did buy today, and I am watching carefully. And I think this one probably will do well. This probably will do well in the next, in the next 2 or 3 weeks. I'm hoping so. We'll see if that's indeed the case. But Zim is giving us another good opportunity, and I like to take as many opportunities as I possibly can when they're available, because they don't they don't come along. Let's take a look at people on TikTok. Thank you everybody for for watching here. Nobody's watching. Well, that probably maybe not. You're notifying you that thank you, man. Thank you for sometimes I get this confused. I try to do the live and it doesn't go. And let's look at this chart for PayPal. Thank you very much, PayPal. PayPal has not been a good chart. I'll be honest with you. In the last, since about June, this is kind of when PayPal changed its character. It was moving so nicely. I mean, I even have the channel drawn in here, and then boom, it comes through it just starts losing steam. Right now, the trend for PayPal is down. So the thing about PayPal, it's not a good time to be in PayPal right now, unfortunately, even though we have nice increases in the sales. But here's the thing, and this again is again what I was talking about with the fundamental analysis. With the fundamental analysis on PayPal, if you notice, they started out the year really good. Their sales were up 23% in December. 31 31%, 81% in March. But then, for some reason, and I don't know why this is the case, the sales increases dropped off the face of the earth. And unfortunately, they've been down. They were 19% last quarter, the 13% last quarter, and the quarter before that, 19%. So we have decelerating sales for PayPal. I don't know why, but it's just not in a good pattern. So here's the thing with PayPal. I wouldn't buy PayPal right now, unfortunately. It's just not, it's just not at the right, it's just not at the right level. That's the problem. And by the way, hello everybody out there. And by the way, if you're looking on TikTok, super easy to see all the charts and everything that I'm showing, because sometimes it's confusing. Just go to my profile, click on the link, and you will see a link to the live feed from YouTube, which is you can actually see the charts. You can see the charts and everything that I'm doing. So let's take the next question. Let's look at FL and do a quick view on that one. Foot Locker. Yeah, it's interesting. I have Shoe Carnival and Nike. Nike. Why do you say Nick? I don't know why I do. This is actually looking fairly good. This is a sort of a modified double bottom, and it does look like it tried today to come above the 200-day line. It failed, but the earnings were up. Let's look at the fundamentals. I'm going to look at the fundamentals on this one. I'm looking on weekly charts, by the way. So we had, unfortunately, their sales came in, but they weren't as good. So it doesn't look promising for this one. 56 checklist. So here's the thing with Foot Locker. Great company, but I don't think you want to be in it because I don't think it's as good right now. So I think you have to be a little bit careful. So, I would go no to Foot Locker right now. So really, that's kind of where, I think you just got to be, careful with Foot Locker. You really, really have to be careful with Foot Locker. Does not look good. Now this retail apparel and shoes area is a very good area, and as you know, I am currently in Shoe Carnival. CHVL is the symbol on that. I don't know if this is a good entry or not for Shoe Carnival, but it's looking. Yeah, it is. yeah, it is. It did come back down and test, but let me tell you, this is a good pattern. This is a good chart. Okay, here's what happened. It pulled up, and then it pulled back down. And it tested at the 10-day line. It reversed. This one potentially is going to be a good buy. So instead of Foot Locker, take a look at Shoe Carnival. There was a nice buy at the end of the day. SCVL, I think this one is doing a little bit better than Shoe Carnival is. I mean, than Foot Locker is. You see, with Foot Locker, they don't have this kind of sales growth. The sales growth was 80% in the last quarter, so they had a very good quarter. They had a very good quarter. Their sales are up. Their profits are up very, very nicely. They're sort of making this transition. They have nice cash flow. So if you're looking for a shoe company, that one might be one that's actionable right now. Shoe Carnival, SCVL. It's actionable, and you could possibly buy that. Let's again to see what's selling in those Shoe Carnival stores. Let's look at Nike. I do own Nike, as you know. That's in one of my portfolios. It's not in the small portfolio, but it's in the portfolio. This is buyable right now. So if you want to get into the shoe area with a really good company, of course this is a Dow 30 stock. You want to possibly possibly the one that you want. I bought on the pullback to the 21-day line. I love doing this. This is one of my favorite entries here. As it comes off this handle, see that there's a cup and then there's this kind of handle there. And as it pulls above that handle, that's really where I like to buy it. I bought it on the 12th. My full position was at 169.42. So that's where I bought it. It's up to 175 after hours and probably is going to go higher. Why? Because it successfully moved through the pivot at 174.36, 38, excuse me. So this is viable right now. So if you're interested, I do think that if on Monday, if this is trading, if on Monday, if this is trading well, then I think that that NKE is viable. So that's kind of my take on it. I do think that NKE is viable. So instead of buying Foot Locker FL, consider Nike NKE. It's a little bit more expensive stock. I know that people don't necessarily want a more expensive stock, but it's better to buy fewer shares of a better stock than more shares of a stock that isn't quite as good. So that's sort of my take on Nike. But so if you're looking at Foot Locker, think about buying Nike, because I think you'll be rewarded better than that. Okay, testimonial time. Hey, thank you. Fundamental analysis of Wish, please. Okay, where do you see the bottom? Gosh, I wish. This is one of the reasons why, everybody, and I learned this lesson so many times. This is why you always want to do the 7% rule, and it's just part of the way I trade now. I just don't let anything go more down than 7%, because even if I think I know the best for it, I'm always surprised by the market. So the question is, where do we think that this is going at the bottom? Okay, well, let's go to the monthly chart to see. Yeah, this could go, but possibly this could easily go to 3 or 2 at this point. I don't think, this is one you want to get rid of. I mean, yes, you could probably hang on to it, send in for the stock certificates, hang them on the wall. It's nice art. But unfortunately, it does not look like this one is going to be, it doesn't look like it's going to be, it isn't like it be returning to profitability. Their last quarter, their sales were down 39%. And I'm doing the fundamental analysis here, and they're just losing money, and it's just not a good scene. So I know this is tough, but I've had these ones too. This is why I have the 7% rule. I just think you just got to sell it down. So sell now and take loss or tax. So that's kind of thing. If you sell it now, if you sell this one now, you can it will be a tax loss. It will be a tax loss. So that's probably what you want to consider doing, is selling Wish and then taking a tax loss. I mean, that's painful, but it doesn't look like it's coming back, unfortunately. So that's unfortunate. All right, how do you find a bottom? Do you have an idea how to test a bottom of any stock? Great question. Well, let's look at Zillow, because I do have a short on that. I mean, it's not really a short; it's a bull put. It's a put spread. But I kind of want to show you. So let's go to Zillow and take a look. Zillow is probably going to go even lower than it is currently. So let's go over to that chart. I'm going to show you the daily chart, kind of where I entered my short. I entered a bear put spread, and basically what the bear put spread is buying a higher put and then selling a lower put to pay for it, basically finance it. I have a 60-70 bear put on one of my. I have two actually. I have a primary trade, and then I also have an add-on trade. But it's a 60. The secondary trade is a 60. Is a 60. Oh gosh, I can't remember. I'll have to look it up. I have to annotate this chart. But as the stock goes down, this one will make money, and I can show you that on the chart. So basically, where do I see the bottom on this one? I see it actually going I see it going much more much further down. Now, what I do think is going to happen is we're going to get a rally. This typically is what happens with these. We're going to get a rally. It's called a dead cat bounce. We're going to see a rally probably up to maybe the 10-day line or possibly the 20-day line. I'm probably going to close this come Monday. I'm probably going to close this trade because I've made very good money on it. But because of course a bear put spread makes money as the stock goes down. But where do I see the bottom of this? Well, I see this possibly. This stock could literally go out of business. Zillow could literally go out of business, and I don't think things are looking very, very good for it right now. They just got sued, and it's. I don't know if it's an Enron because I don't know if it is, but it's not looking good for them. It's not looking good for them. The way you can make money, of course, is either buying puts or what I like to do is put spreads because it limits the risk in case you get a dead cat bounce and you get exercise. So I don't like that. I always like to do the spreads because that way I'm limiting my risk, and I like to limit risk. That's one of my things that I like to do. All right. Okay. Let's look at Hood. Hood's another one that this is coming in from TikTok. Hood is another one. I haven't been in Hood. Just a really bad chart. I hate to break it to people. Really bad chart. It's trading below. It came out. This is a classic example of an IPO base that didn't work. It came out on its IPO very nicely at IPO'd at 38, moved up very, very rapidly as the retail investors bought it. This is where the retail investors are buying it. That's the hedge funds and all that. They sold out to the retail investor. Then the retail investor loaded up and they got some back. And unfortunately, it pulled back down, and then everybody was starting to look at it. This is where the actual funds, the mutual funds, they start to look at it. They didn't like what they saw. It continued on down. It made a brief movement up to this 48, and then it's down from there. For an IPO base, it has to go in a U shape, and so what you do with an IPO base is you wait until about 3 months typically to buy it to see if it's come back up to the top of the U shape. So, I'll probably go into this more in detail, but unfortunately, this is a failed IPO base on Hood. So, unfortunately, I hope you didn't have a lot of it. It might come back, but I'd be a seller right now. It just didn't work. That's the thing. That's why I use stop losses. That's why I have the 7% rule. If you're down more than 7%, you want to sell because they can continue to go down further. They can continue to go down further. Sometimes it's very painful, but that's kind of how it's. Okay, eBay. Let's look at eBay. Thank you very much, and let's take a look at eBay. eBay has pulled. eBay is actually looking. It's looking pretty good, actually. I like this chart. We have a cup with handle, and we did have a cup with handle buy point. The pivot 75.95. We're a little bit below that. What happened is it moved through the pivot, it then got to the top of the buy range, and then started to pull back. But it tested the 40-day line. So I actually like this. I like this stock. 81 relative strength. The checklist is a little bit weak at 56. I typically like to buy them at least 67% or better. Where it's failing, where it's falling down, it's low relative strength and low earnings per share rating. So that, and the sales are down. So there are some fundamental issues right now with there are some fundamental issues with eBay as it currently is. There are some fundamental issues with it. So would I buy it at this level? Well, I would watch list. I probably wouldn't buy this one. I would watch list this one, but I like kind of where it's going. It's a little bit low. The retail internet space isn't doing quite as well as the actual retail space right now. So here's what I would say with eBay. I would not buy it at this point, but I would definitely watch list this one because it might, it might become a better time to buy it. So, eBay, watch list, but not buy now. So that's kind of my that's my take on eBay. I just I like the stock. I use eBay, so I'm very familiar. I'm very familiar with it. Um, oops. I'm very familiar with the stock, but it is just not. It's not viable right now. I want to see it get more strength. I want to see it move above the pivot. The pivot is 75.95. So right now, I'm on the edge. Now, here's the thing: if it does reverse and move higher, then you definitely can buy it. But right now, I would watch this as wait, see how it trades. If it starts to trade up, start to trade above that $75 range, and it's really close right now, that's probably where you want to get into it because it did come through the pivot and it was rejected, and it's going to make a second chance, a second try. So don't buy it right now. Don't buy it under 75, but if it moves above 75, that's kind of where you want to consider it. So it made this attempt. It went above and through the buy range, and then it pulled back. So it's going to make another attempt, it looks like, and that's where you want to buy it as it's moving higher. That's probably your ideal place to buy eBay. But it's a good stock, and so watch list this now, wait and watch, and then it's going to give you an opportunity, I think. I think it's going to give you an opportunity. Hey, Jim, what do you think about Riot? Is it due for a breakout? Good question. My intern here, Blaze Cardozo, he made a fantastic covered call trade on Riot blockchain, and I'm gonna make some slides on it. It was just a really good trade. He's becoming sort of an expert in doing covered call trades, which can be very profitable. So hopefully we're going to add covered call corner here. I'm just trying to get the bandwidth to do everything. But Riot blockchain is an interesting one. It's fallen below the 200-day line, so it's still still trying to get up to this buy point. There is a buy point on a cup basis at 40.80. Currently, it's at 36.37. So could we buy it here? It's the same situation kind of that we have with eBay here, and that is it needs to prove its upward motion. It needs to move past 40 in order really to be in an area to make it more smooth in terms of smooth sailing. Let me look at the weekly chart, because on the daily chart it's a little bit it doesn't show this as much. But here's what happened with Riot. It came right up to this cup. This is on the weekly chart here. It came right up to the SPY point, which is at 40.80, and then it was rejected. It pulled back down. It's getting support, so it may reverse and move higher, but it's a little bit dangerous to buy it below the 200-day moving average. So I would wait on this one, wait for it to move past the 200-day, wait for it to move above the buy point at 40. So I would wait on this one until it moves above 40. That's really kind of my, that's kind of my, my take on it is to wait until it moves through 45, and by doing that, you have a higher chance. You have a higher chance of success. If it moves through 40, then it's tested the buy point once, it was rejected, and it tested again, it's likely to go higher. Just kind of want to look at some of the checklist. It's got a 67 checklist, so that is definitely a good checklist. So Riot blockchain is a good stock. We just want to see it go through that pivot. If it goes through that pivot, we're likely to see it move higher. Just kind of want to take a quick look at the fundamental analysis on Riot. The sales have been phenomenal. Look at these sales, 1,000%, 1,000%, 800%. This is amazing. So this stock is more than likely going higher. It is still the cash is starting to cash flow. So it's turned the corner in terms of profitability. So I definitely see this one probably in the next quarter doing extremely well. But I just a little bit leery. I want to see it come above that $40 buy point. So I'm a buyer of Riot probably above $40 a share. But I don't want to buy it below that because it could still test lower. And that's just a tough way to go. Forex. I don't trade a lot of Forex, but that can be really good. This is the year is this okay. This is the Euro Turkish Lira pair. I don't trade this pair, but that's an interesting, really interesting. By the way, everybody out there, I don't know if you know this, Turkey, unfortunately, is having a tremendous trouble with their currency. They have extreme inflation there. Unfortunately, it's probably what's going to happen in this country. I don't think it's going to hopefully not happen to the level of Turkey, but it's almost like Argentina. It's almost like Argentina inflation. So what's happening is many people in Turkey not being able to securely store their savings in Turkish lira are trying to sell Turkish lira and buy anything else, euros and that. But what they're really buying is Bitcoin. And that's been blowing the Bitcoin market for quite a while. Now, Bitcoin has been down a little bit. I want to take a look at the GBTC. This is a trust that owns approximately 4% of the world's Bitcoin. And Bitcoin is kind of coming into its own. It's becoming a lot more acceptable than it was, than it was basically just a little while ago. And a lot of people are storing their wealth there. The Turks are one of the biggest. There's other people, of course, all over the world, but in Turkey, they're having such a problem with the currency that many of the biggest buyers of Bitcoin are Turkish. Here's the thing that's going on with the GBTC. It's pulled back a little bit. I do think that we're going to have another opportunity with Bitcoin. We're going to have another opportunity with Bitcoin and the GBTC. Bitcoin is pulled back a little bit. The thing about Bitcoin and the way I've seen people successfully trade it, I am not a great Bitcoin trader. I trade the GBTC instead. But I want to take a look at the Bitcoin price. So I'm gonna look at the Bitcoin price here. Yeah, it's sort of hovering. It's sort of hovering right at that. It's sort of hovering right at that that 57 area. Let's pull up the window here for that. There we go. This is just the internet that I'm looking at here. I'm just looking at the Bitcoin price. As you can see, it's gone all the way. It's really been volatile this month. It's gone all the way from a low, basically, in the 50, all the way down. And let's look at the month chart. There we go. Yeah, it's pulled all the way back down to 50, and then it tested, and then it moves up, and then it tested again. It tested again here at 56. Let's go up 5 months. Yeah, we're still in, and if you look at this chart very carefully on Bitcoin, it's in a bit of a downward trend. It may be a good time to buy it when it comes out of this downward trend. So I want to keep a closer look on Bitcoin. I think Bitcoin could fall, down to this $40,000 support, and that would be interesting. That would be interesting. But right now, Bitcoin is pulling back a little bit. I do think it's going to reverse higher, and that's why I think that Riot blockchain this next year could be huge as well. But right now on Riot, you don't want to buy it. It's pulling back. You want to wait until it reverses, hopefully above 40 on Riot blockchain. If it does, then I think you have some pretty nice, you might have some pretty nice smooth sailing there. All right, let's look at the two retail let's look at the two best of the retail department store stocks. The one I said I was getting so excited. Yeah, I was getting so excited on those retail stocks, and then of course I bought KSS, but I had to sell it today because it violated my 7% rule, and I just don't want to do that. You want to be very strict on taking your losses quickly, because over a long period of time, that will determine how well you do in the market. And so I always try to take my losses at 7%. I don't always do it right, but I try to take my losses there. Look at Macy's. Macy's did pull back. Macy's yesterday was extended, and it did push up, and then it pulled right back down, gave up all of its gain. When you're buying hot stock in a hot area, this is something that you can always look at. There's something called the 10-day moving average, and that's this little pink line here. And you don't really want to buy a stock, and I know these are all these little rules that I'm throwing out there, more than about 5% above that line. Well, even today after the pullback, Macy's is still 8% above that. So unfortunately, it's extended, and that's a problem. Now, KSS, I probably sold it too early, but again, I have the strict rule of 7% down from where my losses are, and you can see it's bounced in the after. It's bounced in the after hours. So what I think has happened with KSS is I think it's going to be an update tomorrow, not tomorrow, Monday for KSS. Why? Because it came down and it tested. It didn't quite come down all the way to the 21-day line, but it still has a very, very good chart pattern. So I do think we're going to see this one reverse higher. So my thoughts on this one on Kohl's is that we're going to see a movement higher. We're going to definitely see a movement higher on this one, probably on Monday or Tuesday. Unfortunately, it just pulled. It came up. It got a little bit too much altitude, pulled back through the buy point, tested, and I think it's probably going to come back up. Why? Because look at the after hours. It's already starting to move in the after hours. So I do think we're going to have an update for Kohl's tomorrow. Unfortunately, I won't be there because I was stopped out. I was stopped out right at about 57. That's where I had my stop loss. And actually, it went down a little bit below 57, and I think it pulled up. So let me just take a quick look. Yeah, I had my stop loss right there. It's where it activated, and as you can see, it just pulled right below that. Got sold out, and then it started to come back. So, can't win them all. But that's why you use stop losses, so that you can find another day. That's a very big key thing. All right, let's look at Upstart. I think you mean Upstart here. Let's look at Upstart. Upstart. UPST is Upstart. Upstart Holdings. And so basically, here's what we got with Upstart. We're still below this reversal line. So unfortunately, I still think there may be more pain. What I do think is going to happen is we're going to see it. It still has this incredibly high relative strength rating, and I think the checklist is still quite good on it. Yeah, 67, it's decent. So what we've got to do with this one, we have to wait for a reversal. I do believe there's going to be some support right here at about 191. So I do think we're going to see some support there. And I do think it's going to reverse higher. But right now, and actually, if it does start to reverse, that's kind of where you want to buy it. But this is the reversal line right now. So right now, we can't buy it really. We kind of have to wait for it to reverse higher. And right now, it would have to move above 300, and it's at 209. So that's a long way to go. So, we just right now it's pulling back. So we've got to wait and watch this on Upstart. This is the only way we can do it. Now, if you're in Upstart and you're down more than 7%, it's a good time to sell it and wait until it moves. It reverses and moves higher. I think it's likely to reverse and move higher. And you say, Jim, well, why would you do that? Well, you don't want to you want to get as much of the upward and motion as you can, the least amount of the downward motion you can. So if you're down more than 7% on on Upstart, I would consider selling. So UP UPST, watch list, and possibly buy above 300. So that's really really the long and the short of it. With Upstart, we're still in decline, so we need to watch this. I wouldn't buy this now. If I'm down more than 7%, I'd be seller. But then if it reverses, and it probably will, I think it probably will reverse off of this line here, this 200-day line. Then as it starts to make its way back up, we could possibly buy it again above 300. But the problem right now is that it's probably going to give up all. This is called a round trip. It's probably going to give up all of its gain. It came all the way up here, and then it's in the process of getting back all of its gain. This is why you want to use stop losses. And as the stock moves up, you want to keep setting that stop loss up, because that's going to protect you on the way down. And so right now, it's not really actionable. We've got to wait for it to bottom. It hasn't bottomed yet, but I do think overall this is a good company. It's a good stock. I do think that it will bottom and it will reverse higher. But right now, we can't do anything. We just got to watch this one. We got to wait because for another opportunity. Right now, we don't have a good opportunity on that one. Let's take a look at we did eBay, Penn National. This is for TikTok. Thanks for that. PENN is the symbol for Penn National. Penn National is kind of in one of these funks too. It's funny how it kind of works that way, but it's below the 200-day line. So this is another one that I was in and out of, basically last year, but I was on the other side of this mountain, so it's kind of moving down right now. They had a bad earnings, and this kind of set things off. Their sales were up, so I want to show you the fundamental. I want to show you the fundamental analysis here, on this. But their sales were definitely up 64%. They just came through earnings. Their profits were down 44%. So this really hurt them. And this is another reasons why I have typically a rule, and that is if I'm not up on the stock at least 10% before earnings, I will sell it, because sometimes when it comes to earnings, it can be a disaster. And unfortunately, that's the case here with Penn National. If you're down more than 7% on Penn, consider selling it and finding a better stock for an entry. Just right now, it's just not working. I'm sure it will again, because it's a good company, but right now, Penn National just isn't working, unfortunately. Nvidia has great earnings, stock jump. Yes. What about Nvidia? Absolutely. And by the way, I did increase my position in Nvidia today. I did have a position, and then I doubled it with Nvidia. I very much believe in this company, and it's been tough for me because sometimes it's tough to hold, but this is sort of kind of where I've come into it. I wrote it up, I closed, and then I've wrote it up and I've closed. But I do believe in this company. It's just looking incredibly strong. If you go over to the daily chart, yeah, look at this. The earnings per share were up 60%. This is no small company either. That's what's so incredible about this. Yeah, look at this. This is a fundamental analysis here that I do from time to time. But every quarter it's up like 60%. This is the sales, and the profits are the same. This is just a monster stock. Now the problem with this, of course, is it's not really the greatest place to buy it, but it is in this little bit of kind of consolidating area from basically right under 300 to basically about 340. It's at 330 right now. So can you buy it? Well, it is extended. It's a little bit risky to buy it. I did buy it here, though. I will admit, I bought it. I made a buy I made a buy for 325 yesterday. I made a buy today. I haven't renoted it for 320. 320, 324 yesterday, 325 today. Two full positions. It's probably going to pull back a little bit. It's getting a little bit extended from, well, not a little extended, a lot extended from the 10-day line. So the 10-day line, it's currently 7% above the 10-day line. I don't typically like to buy them this high, but I'll buy it up to 5% above the 10-day line. But after that, it gets really dicey. I really like the stock, of course. Anybody that's been watching me for any amount of time knows that because I've had I've done the 4-for-1 split, and so it's just been a tremendous company, and I think that it's probably not a bad time to buy it right now. I mean, it's a little extended. Technically it's a little bit out of the out, but it's a very, very, very good stock. Let's see if we can get one last question here. We're just on an hour. Let's look at DraftKings. Okay, let's look at DraftKings for Hans. Thanks, Hans. PKNG. Yeah, it's the same pattern. Unfortunately, it's Penn National, and that is a downward trend. So just no love on this one right now. It's funny. It came right up to the 64.58 buy point, and ever since it tested it, and boy, it didn't meet the test. It's been down ever since, and it's trading below the 200-day moving average. So here's what I would say with DraftKings. DraftKings is not in a viable position right now. Watch list. So really what you got to do with this one is you just have to watch list this one for now. You got to kind of wait for it to reverse and move higher. It's just been steadily marching down. Eventually, we're going to find the floor here because it is it is going to be it is a good company, but we may have to go through some more pain. We may have to go all the way back down. We may have to go all the way back down to $20 a share. I hope that's not the case. I hope it finds some support because it's just had tremendous sales, but they're still losing money. And so I do think that right now all you can do with DraftKings is just watch it, and then if it turns, then then you can come in with with a better deal. So everybody, thank you so much for watching the YouTube channel. Please like this show. Please like the show. It helps us get out to more and more people, and it's my goal to get out, obviously, to a lot of people and help them with trading, because I tell you, trading stocks changed my life, and it can change yours too. So please like this one. It helps me get out to many, many more people. Also, consider getting, if you're not on the Action Trade Alerts yet, if you're not on the list yet, it's super easy to do. Just go to www.Dallas Trading Floor. So I'll be back on Monday at 3:30 Central Time and 3:30 and actually 4:30 Eastern Time for the next installment, I guess, of Dallas Trading Floor. Everybody have a wonderful, wonderful weekend. The markets are going to be closed over Thanksgiving. I'll be talking about that next week, but happy trading.